one of the contexts that you're operating in right now is, of course, a potential downturn and outlook that's a little bit shaky. So in this economic climate and context, how do you see the principles standing and implementation, getting buy-in to continue to resource implementation and really put the focus that's needed to be successful in achieving targets with these potential issues emerging?
I think if you're a pessimist, you take yourself back 12, 13 years ago and you look at what was at that point quite a growing area of ESG, responsible investing, ethical investing. You know, some of the terms shift a little over time. And how, as a result of the financial crisis, people got a little bit worried about getting their money back full stop rather than the ways in which they were getting that money back. And I think that acted as a bit of a brake on some of the progress that was taking place through the mid-2000s. If I'm an optimist, though, I look at how fundamentally the financial crisis reshaped the rules of the game. Financial institutions, banks, asset managers were forced to really look hard at how they served their clients, their communities, the societies in which they operate and their business models. And regulators, I think, and I think Sarah's still in the audience, but you know, the regulators felt empowered, I suspect, to start asking questions which led to the current regulatory paradigm on climate change and maybe other environmental factors, which I don't think would have eventuated without the financial crisis. So I'm certain some of the momentum may be hampered a little if we go into an economic downturn, because we need only look at the job layoffs that are taking place in the sector at the moment to see organisations having to right size for that environment. But I don't think we can put the genie back in the bottle, as it were, on this topic. I think it will continue to be one which defines the sector as we look out over the next 10 and maybe more years.
Yeah, just to follow on from what Simon was saying, for me, the time is absolutely right now. I think, yes, the financial crisis had a big effect on banks rethinking their function, you know, their role and position in society, and so that's kind of set a baseline that sadly perhaps wasn't there just prior to that. But I think we are servants of society. You know, we are the means to make the global economy flow, and I think the fact that this existential issue of climate change and all of the associated social issues of the sustainable development of the world over the next 5, 10, 15, 20 years is so important now that you know, even another financial crisis, God forbid, but even other sort of more deal-related, exciting financial issues now, you know, they will not take the eyes of the main decision makers off this ball. I think you know, we're now on a roll. So to be sort of more optimistic, I think over the next 2 or 3 years we're going to see a massive change in approach in the sector, and this really is, again, referring back to some of the discussions earlier on today. You know, we're not in all banks, but very quickly it will be the case. You know, this has gone well beyond PR, CSR, sustainability. I mean, this is deeply embedded or embedding in the main businesses of the bank.
But if I can just add one point to that. Recessions make people fearful. Recessions cause people to curtail the time horizons over which they're making decisions. And so if there are two things that worry me particularly that I think we need to think about if we're heading into a recessionary environment. One is, the first panel talked a lot about what needs to happen in the real economy. And so already, regrettably, we collectively as societies are not on track. You know, we've set laudable and incredible goals in terms of net zero by mid-century, but societally we're not on track for that at the moment. So the first is, banks can only be in service of their clients and what their clients are doing, and we must be very careful to avoid a situation in which there is backsliding on climate ambition in a recessionary environment. The other is thinking about the culture of decision-making within financial institutions is people tend to cling to what they know. Now, I think to Stephen's point, there is now a long enough history of experience with financing new models, new ways of doing things which support the low-carbon transition. But I think we must also be very careful within our own organisations not to see that if things get tough in the economy, We move back to, oh, well, we know how to finance reserve-based lending in oil and gas, for example, but we don't know how to finance the circular economy, so let's not try.